What's good YouTube, Darryl here back from Alpha DX. Today I'll be covering a short video, 5 minutes long, on investment so that it's easier for you guys to digest because it's 5 minutes. I think my videos are probably too long. I'm not sure why, but some people really want to learn about investing but they don't watch my video because I think it's too long and boring at the same time. So I'm just going to keep it short this time. I'm going to make it 5 minutes long. So I'm just going to give 5 simple tips for you to start immediately today at 20 years old, at 30 years old, whatever age you are. And I'm going to make the threshold very, very minimal so that anyone can come in. I couldn't make this video 5 minutes long, it's actually 10 minutes long. But anyways, watch the video until the end because I'm going to teach you everything about portfolio management. I'm going to teach you everything about understanding the products that you buy, like the shares that you buy, and also why you must always learn how to view it as an asset rather than just something to make quick money out of it. That's tip number 1. You only need 100 USD to start because if it's lesser than that, then it's very limited the amount of stocks you can buy. But if it's more than that, then yeah, of course, not everyone has more than 100 USD, especially if you're maybe like 19 years old. I'm talking about the whole wide range here. So if you have more money, that's better. If you have 1000 USD, that's even better because there are going to be a lot of stocks that you might want to buy with 1000 USD because the range is bigger, you see. And you can accumulate more shares of a cheaper stock or less shares of a more expensive stock. But either way, you can get good stocks with 1000 USD. But 100 is good enough to start. That's all I'm saying. Because there are certain small mini shares. They are not penny stocks, but they're cheaper ones. Maybe you can accumulate a 1 unit or 2 unit. Yes, it does not make a big impact in your life, but you get to see the shares movement. You get to feel the feeling of holding a share. So that's how I actually started as well. I didn't start with buying 1-2 lots of something because buying 1-2 lots of something probably is a penny stock and I don't do that. Tip number 2, understand the industry and their market. What I mean by that is, let's say you want to buy Starbucks and you're a guy who never drank coffee before and you completely don't know anything about coffee market. You don't have any friends that drink coffee, and then you say, oh yeah, maybe I should just buy Starbucks because it's doing well now. I mean, you can do that, I guess, but it's not really advisable because understanding industry gives you excitement to hold that industry, if you know what I mean. If you don't understand industry, you're basically just buying it because you think like, oh, this company might do well, but I don't really care about the company because I don't know anything about it. I don't even want to try. Like if you really cared about it, maybe you want to go try a Starbucks coffee first before you actually purchase the shares, or maybe something from Starbucks. At least you know a bit about the company, who's the CEO, who's the CFO, what are their backgrounds and their. If you don't know how to read annual reports, for a start it's still okay for a start, but you might want to go dig deep into it and start by reading the most fundamental stuff inside it. And if you don't know, then maybe try googling it or maybe ask a friend that's an audit. They definitely know and they'll definitely teach you. So that's tip number 2. I'm just going to keep this short, okay? I'm not going to dive too much in it. Know your market for tip number 2. And tip number 3, don't think trading is investing, because trading is not investing. Trading is gambling, and I mentioned this many times before, and that's because when you trade, you probably don't know crap about the company, because when you trade, you're not buying big companies at all. You're buying those tiny ones, the tiniest ones, and you probably don't know what they are, what they do. You're just buying it because there's an abbreviation like ADH or APV, and then you're just saying like, oh, okay, this one's a good price. I see the technical analysis, it feels like it's going up now, or I hear someone saying it. In Malaysia, it's very common for people to pass news around for Malaysian stocks as well, because people have some news over there. Oh, this one's going up because of some insider news, and then they might pass it along. But be very careful with that, because if you don't have a legit source, or if your source is like not consistent, then that might be a problem, because you're gone. Once you get the wrong one, you put your money into it and that's it. And most of the people who do trading normally also go for margin calls. because they wanna leverage on their earnings, and that's a huge gamble. I'm not even going to go into that, but like I said, trading is not investing. Investing is buying something that you really truly understand and you've read everything about it, maybe not everything but most of it, and you hold it for years, not months but years. That's tip number 3. Tip number 4, start the habit of saving. Always believe that investing is using your money wisely. Actually, you need to learn how to save. You need to learn how to save before you can even start investing, to be honest, because if you want fast money, that's not investing, that's trading. What I mean by starting to learn how to save is every month when you get a paycheck, if you're working a 9 to 5, if you're having your own business, monthly profits and whatever, you need to take a portion of it and invest every single month. If you have the habit, then you'll notice that your bank account will not be a lot every month because you're taking like a big chunk out of it. What I like to do, I like to drown myself. I like to take like half of it, 3/4 of it, so that I don't have to feel like, oh, I have money to spend and I just go and spend it. When I spend on something, I want to feel the pain. I want to feel like, oh man, my bank account only is like $1,000 left, and this haircut is like $200. Should I really get this haircut? Should probably get a haircut though. So that's what I mean by taking a portion out of your money, so that you will have the illusion that you don't have enough money and you will spend it wisely, and you can use the money to invest month by month. And that goes to dollar cost averaging. Dollar cost averaging is when you're okay, you know what, that will be for another video, but what I mean is, yeah, take a portion of the money out and invest it. That's tip number 4. Tip number 5, this is probably a very important tip, and you guys should all really keep in mind for this last tip. Tip number 5 is read, and not only read, but capture the key points, what Warren Buffett says, what any investor that you read says, what Benjamin Graham says. Even if you're watching videos, for example, if you're watching, what's the guy's name again? Benjamin Stephan. Yeah, he has like really good investment videos. If you don't already know, just go check him out. I'll put the link in the bio. Just go check him out. He has a lot of good investing videos as well. I'm promoting him because I've learned a lot from him, and of course investing is understanding the product, and it's not really too much of buying it at the right price. Yes, it is, but if you are a beginner investor, it does not really matter what price you buy into. It's more to how disciplined you can hold the shares and how you perceive the shares as a part of your own assets. For example, if you buy Coca-Cola, okay, I'm just using very simple companies here because if I use complicated ones, people will know what it is. So, for example, you buy Coca-Cola, and I think it's a great stock. Okay, let's say I think it's a great stock. I like the product. I drink Coca-Cola. I drink products that the company Coca-Cola has. And I also maybe like, Dasani water is under Coca-Cola as well. So I have all these products. I feel like they are really a good company. They have a strong backing. They have strong financial backing. And I feel like, oh yeah, this is good. So I buy Coca-Cola. But the problem is when Coca-Cola rises one day and you feel greedy, you'll be like, oh man, I can earn quite a bit if I sell this right now. And you know what, Coke, maybe after a month or so, it might drop back down to the same price that I bought in. So why not I just sell it now? You have a lot of these kind of thinkings for beginner investors. Why not I sell it now? Because like now it's at a high price and I don't want to feel like, I lost something, right? I mean, I rather sell it now. Maybe later on I can buy back again. But there goes a very big problem, because that is why remisiers, stockbrokers really love people like this, because whenever you trade, they earn money. You sell, you buy again, they earn money. And thanks for giving them free money. Don't do that. Okay, even if it goes up, you have to picture it as buying yourself a new phone, or buying yourself something that you really value a lot. For me, I feel like I'm buying myself, or I'm having a child, or having like a pet. I did not think like that when I first started, but right now I'm feeling it that way. I'm not going to sell it, because even if it goes up, so what? if I made a right decision from the start to even buy it, I'm already foreseeing it to go up much higher in the long future, and I'm not buying it just because for it to, just for it to go up high. I'm buying it because I like the company, I see potential, I see good future in it. And if you see good future in something, it's not going to happen within few months, not 1 or 2 years as well. It's going to happen in a 10-year run, 5-year run, 20-year run, and that's what good companies do. They improve and they show themselves. They show themselves in the long run, not within few days. Those are not good companies. Those are just speculations, and you guys need to know the difference about it. And that's all for today's video, guys. This is a short video. I hope you guys like it because it's a bit shorter, a bit easier for you guys to understand and watch to the end. Anyway, thank you so much for watching my video. I hope you like, comment, and subscribe. Give me a thumbs up so that I can produce more of these kind of content. I'm still trying to find what kind of content you guys like, but I think these are the ones that you guys actually like. So like, comment, subscribe, and I'll see you guys next time.